Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Tuesday, June 17th. Don't really have too many tickers to be going over, and so I felt like it was excusable to be a little bit late. Sorry about that. But yeah, short list, so I think I should be able to get through it. And if there are requests, put them in the chat, and I will open that up once I get through the list here. But yeah, the one that I did want to go over is Webull, ticker symbol Bull. I noticed some unusual options data from Friday. I noticed it yesterday, was posting about it, so I did want to go over that, maybe dive deep into it. But yeah, first we're just going to go through the usual tickers, beginning with the UVIX, which is the 2x long VIX futures ETF, which closed yesterday on June 16th at $26.00, down just over 14% on the day. But we did get a little bit of a bounce up over 4% in the pre-market, but that's actually coming down a little bit from either the after hours or overnight trading. I forget. We'll look at that in a second because of the tensions in the Middle East around Iran and Israel. And yeah, so I do think that this is a nice thing to hold, but I do feel like I should have been more aggressive buying this when the VIX was below 17. So we'll look at that as well. But yeah, we could see that let's see, this was Friday last week on the 13th. Did get a green candle with a gap up, closing above $30 a share, that green line there. And so the close on Friday was at $30.99, but then following that we did gap down, and so we have this gap from Thursday to Friday that we had not filled on Friday, but yesterday on Monday we did fill that gap, coming down to, let's see, the close on the 12th was at a price of $26.03, and the low for yesterday was $25.50. So we most definitely did fill that gap. But then now there is this gap to the upside because we closed on the 13th at $30.99, and the high from yesterday was $27.80. So there is that gap there that you can see. But if we do flip over to the 10-minute time frame, we can see that, yeah, it does look like it started to spike up in the after hours yesterday, which continued into the overnight, having hit a high of 28.25. Let's see, about 30 minutes before the pre-market opened, maybe 40 minutes, 30 to 40 minutes before the pre-market opened, and then it started to cool off. So hopefully that means things are calming down in the Middle East and regarding U.S. involvement, but maybe not. It seems like I was expecting it to be a low volume, not so volatile week because the market's going to be closed on Thursday for Juneteenth. And so I would think that this is kind of, a short condensed week, basically 3 days with effectively a 4-day weekend. I'm imagining that not too many or not too much activity will be seen on Friday, considering it's, between 1 day off and 2 days off. So might as well take a holiday there. But anyways, yeah, this is now trading right around $27 a share. And yeah, but this could be pulling back to 25, back to around 24. So do keep that in mind that this may not be going up to around 32 for a little while. And then if we look over at the VIX, this did close yesterday at 1911, down 8.2%. But just like with the UVIX, we saw a gap up, a gap down. But unlike the UVIX, we have not yet filled that gap to the downside. So maybe that does suggest that the volatility will be cooling off before we get the next move to the upside. And also just pointing out, what I was saying about, only really adding to this when, or to the UVIX, when the VIX is below 17. So if we look over here, let's see, when did we first get below 17? Over here on June 6th. So would have had about 5 days to be able to accumulate some, let's say, just like right at 17, let's say. So that's going to be right around here and go up. I'm just going to adjust the low to be exactly 17. And so that would represent, a 28% move to the upside, but of course it is down from there. And so that would be up about 12%. But then if we do look over at the UVIX with the candle corresponding with June 6th, that would be over here. So let's say even if we got the high on that day, but then started to accumulate more over here. So let's say we were able to get the close of that day. That would represent, more than 10% move to the upside. So yeah, I think like really waiting for the VIX to be below 17, even if in the past, like over here, got very close to 17. So on, let's see, May 16th, the low was 17.15. That would have been a good time to buy, even though it didn't go all the way down to 17. It was 17 and some change, but that's a 48% move to the upside to the close, almost 30%. And so that date, May 16th. So if we look over here, May 16th, right here, that would, and also, with that, there's kind of a little bit of a divergence here where on May 16th, that was a low, a new low for the VIX relative to what we saw on the 13th or the 12th of May. But then if we look over at the UVIX, the 13th was a low, and then on the 16th, it was a higher low. So there's a bit of divergence there. The UVIX is putting in a higher low. The VIX is putting in a lower low. So that divergence makes me think, oh, there's something odd there. Maybe that's excusable that the VIX, sorry, I keep going back and forth, that the VIX did not come all the way down to $17.00, $17.15. It's like, oh, okay. Maybe that's a time to pick up some UVIX or some VXX, whatever you prefer to trade. And then from there, that would be more than a 20% move to the upside. So I think that's probably a good way to look at the UVIX. And so I am, rather than, when this comes down to 24, where I have this alert, or when this comes down, a little bit lower to 20, I would not necessarily look to add to my UVIX position unless the VIX is right around 17, because then I think that could be followed by a nice little rally. But yeah, I think that's kind of enough on the volatility. I do think that we could be seeing the UVIX and the VIX spiking up today, but it may not be as high as it was on Friday the 13th, when the UVIX hit a high of $30.99, which in the pre-market, after hours, and overnight, I think the high was just shy of 32. Looking over at the VIX, we did see a high on the 13th of $22. So good to keep all of that in mind. But now let's flip over to the SPY, which is the S&P 500 tracking ETF, which closed yesterday on Monday, June 16th, at a price of $602.68, being up about 1% on the day. But now it looks like it's pulling back about 0.36%, or around $2, down to around $650.50. And so we can look at that in the pre-market. But what we have over here, it does seem like we have lower highs in the ETF price, also corresponding with lower highs in the RSI. But volume does seem like, I don't know. Yeah, it's tough. I don't know if this is potentially a bull flag. I'm going to delete this doodle since it's in the past. If maybe this is a bull flag, or maybe bigger picture we want to look at, we do have higher highs here in the price, whereas over here in the RSI, we have lower highs. And so that would be bearish divergence that could be suggesting that we might be seeing a little bit of a retracement. And so to get an idea of where that could be going to, let's just see the low over here. That's should be lined up there. And then up to this high, 605.06, 618 around. Really, just coming down to around 590. I think that is where this could be pulling back to. And if it does break a little bit lower, 580. And that is, really just kind of corresponding with these levels here. So maybe I don't want to have too much up there. Don't want to have too much clutter. So I might just remove, let's see, the 786 and the 100%, because I can, see those levels effectively already on there with that red line, effectively corresponding with the 786 And then the low over here, that's obvious. But then that 618 is around 587. So I'll just leave that up there so we can keep that in mind. And let's just flip over to the 10-minute time frame. And we can see that since, let's see, this was Friday the 13th over here, did have a pretty big pullback Thursday once we got into the overnight trading, hitting a low of 591.82. And then this has gone up a little bit since then, has been consolidating. So yeah, I mean, I do think that we could still be making new all-time highs by the end of this year. But between now and then, maybe we do see a more notable pullback on the short term, like in the June to July time frame. So good to be keeping that in mind. But yeah, keeping that in mind, let's just look real quick over at the SPX, which is the S&P 500 index. I'm just going to leave this doodle up here still, which could be suggesting that we do pull back to around 5,700, which may correspond with around $570 for the SPY. But looking at the SPX, it did close still above 6,000, so closing yesterday on Monday at a price of $6,033.11, being up 0.94% versus the SPY, which was up 0.95%. So very similar there as we would expect. We do see higher highs over here with the price of the index corresponding with lower highs in the RSI, just like the SPY. That is going to be bearish divergence. On the shorter term, we do see lower highs here, but that also corresponds with lower highs in the RSI. So no divergence there on the short term, but pulling back, I do think we could be seeing this come down to around 5,870 or so. And if that does not hold, like I said, coming down to 5,700. So good to keep that in mind. And then now let's flip over to Bitcoin. I'm just going to throw the drawings back up here, although I know it does look a little bit cluttered. This is the level that I drew a while ago because I don't really draw too much stuff over here in Webull as far as crypto goes. But this is the level of 108,000. Yesterday on the 16th, it does look like we got a wick up to that level, but a rejection. Did I say Thursday? I feel like I said Thursday. I'm not really sure why. If I did, or maybe I just imagined that. But this is the 16th. We can see a wick up to there on Monday and then a pullback. But the opens and closes for these candles, looking in Webull, is going to be a little bit different than what we would see in TradingView. So let's pull up the TradingView chart of Bitcoin, and we can see, yeah, a big wick up there on Monday, the 16th. Getting a high of $109,000 miraculously in 0 cents, 0 hundreds of dollars, 0 tens or ones of dollars, exactly $109,000. So pretty interesting there. This is the data from Coinbase denominated in the US dollar. So you can look at this over in TradingView if you would like. But yeah, big wick to the upside, pullback, and now still consolidating around this level, around $106,000. So is this a bear flag, with the downside move and consolidation, or bigger picture, is this, a bull flag, upside move here, consolidation? I would be excited if we did get a wick down to around sub $100,000 to be able to buy the dip, because I do think that we will see this be going higher later this year. But yeah, I mean, very tough to know what's going on in the markets around, what's going on in the Middle East. So we're just going to have to see. But it does seem to be kind of volatile. But we are still, holding with all this volatility, all the unknowns, the uncertainty. We are still holding higher lows. So that is going to be interesting. If we start to break below around 104,000, that could be testing this uptrend, suggesting that's a dip by level. But then if we start to get a close lower than the low from the 13th, which was just below 103,000, around 102,746 and 1 penny, that would be then starting to put in a lower low, but still then we'd have to check out this previously lower low to see if that gets taken out. So we'll have to look If we do break below 104,000 and get below 103,000 especially, we'll have to revisit. But then now looking over at Ethereum, just like Bitcoin did see a massive wick to the upside on the 16th, did put in, let's see, a little bit of, that would be, I guess, a gravestone doji, where we have a big wick to the upside, small wick to the downside, and that's really just like the opposite of a dragonfly doji, which you would actually see, no wick to the downside if this is to be a real gravestone doji, but we do see a little bit of a tail there versus the big wick to the upside, but really just, big wick to the upside versus the relative, small wick to the downside. That is a gravestone doji. So that could be suggesting that we see a continuation to the downside, as we do have, downside move here, consolidation that could be a bear flag. But bigger picture, I mean, this looks like it was potentially a bull flag, but then with this pullback, we're not seeing that play out, and maybe this is going to be a failed bull flag, and we maybe get a pullback to around, sub 2000s. That would be kind of crazy. But we do have all of these, fib levels that could be acting as support before getting down to this red line here is just below $2,000 at around $1,977.69. That's the 786. Although I probably should redraw that. No, actually I did redraw it to the high over here. So that is potentially still valid, but maybe I'd want to extend this to the lows over here to give us a better idea. And I actually should probably do that for Crypto Corner Sat Stacker. But the 382, the blue line there, is around $2,442. So $2,442. And, that has been acting as, effectively support. Any tests of that level have been dip buying opportunities. And we have more recently been putting in higher lows. We're still putting in higher lows. So I would not really be too concerned until we started going lower than the low from June 6th, which was at $2,384.00. So that's going to be a good level to be keeping in mind. But generally, I think that Ethereum could be hitting potentially $8,000 by the end of this year, maybe early 2026. But I think that this could be heading up to above, let's see, $4,000 for sure. And it's currently trading, I forgot to mention it, around $2,550. So lots of upside potential there. And if I did not mention it with Bitcoin trading below $106,000. But now let's flip over to Webull. Did close yesterday at a price of $10.69. Up 2.89%. This is something that, I was looking at, was following Mr. Chart Norris on Twitter or on X. But to be honest, I find that, options data to be a really important aspect of, looking at charts, because it's not just price that's a factor, it's also time. And so I had noticed, this yellow line here, if we do zoom back in time or go back in time, that was the consolidation highs, or the open, I guess I should say, 1340 from March 28th. That was the high, and the open 1340, that yellow line I have drawn there. And so I found that to be kind of an intriguing level that, maybe Webull could be bouncing from. It did bounce from, I was not in it there, and then I got in over here, and of course we have faded lower, as, it tends to work out. But I had some conviction in Mr. Chart Norris's posts, because he has seemed to post a lot of really good stuff, but he doesn't look at options data. He just looks at the chart. And with that, entering here, let's say, at this cross of the yellow line, that then is a month of this just fading lower. And so I've actually lost a lot of conviction in his analysis, because he doesn't pay attention to options, and because I hadn't seen anything in the options data on Webull that stood out as interesting. And so I was, regretting this trade, which was based on something that I had identified that ended up failing. I had a stop loss down here at 1110, which I actually ended up trimming out above that level, and that, I should note, corresponds with like the consolidation lows over here. So I thought that might be acting as support again. But then I decided to add back what I had trimmed out on at 1110, thinking that could be, acting as support. I would be selling at the bottom rather than if I had a stop loss there. And so, yeah, I've not really been impressed with this. And yeah, I've been disappointed in it, I must say. But there was something that I noticed in the options data that initially made me think it was bearish, but I think it's actually kind of bullish. So let's look over at that. And so that's this post over here. So we'll dive into the screenshots of that and then also go over the data in Unusual Whales. But here, kind of this follow-up tweet that I had is that red volume makes me think puts were sold to open, which is bullish. And so I initially put a rocket emoji there, but I decided to change it to a peach to signify that I think it could be bottoming, not necessarily taking off. And so what I have in this post here is that there was an $8 million increase in bull net put premium on Friday, which was the most premium over the past 30 days. So that's this chart over here, which was 3.3 million on deep in the money $35 calls. Puts that expire on November 21st, and then nearly 6 million on deep in the money $30 puts that expire in 2027. And so if we look at those charts, we can see here, this is, the net put premium in red going up pretty massively up to just around $8 million. So we can see that number over here on, just shy of $8 million, $7.96 million. And this was from Friday the 13th, as you can see here. And so we see these big increases in net put premium. So that makes me think, well, net put premium is going up. That makes me think this is bearish, that somebody's probably buying a lot of puts because that premium is going up here. But then if we look at the volume, that is actually very notably red, which would suggest to me that these could be getting sold, whether they're sold taking profits at the bottom, or they are sold to open, which would be like a cash secured put. So I think that is probably what is going to be happening or what did happen on Friday the 13th. And also I should note too that the net call premium, that was down about $320,000, but that relative to the net put premium, it looks like it's just a flat green line there more or less. But if we look over at the next screenshot, we can see over the past 30 trading days, the net put premium that we saw going up by $8 million on Friday the 13th, that is the most amount of premium that we have seen traded on a single day in the past 30 days, whether that's to the upside, $8 million here going across, or to the downside. The most downside that we would see is about negative 2 million or so, going over here with the calls being sold here on, which I believe would be May 9th. But yeah, so this does stand out to me as being unusual. Then if we look over at the next screenshot, that is going to be for the $35 put that expires in November. And so we just have this one big candle here that represents about 3.3, almost $3.4 million. And if we look at the open interest on the 13th, it was about 400 contracts open on that day, corresponding with this candle, about 1,300 contracts. The volume for that day was 1,321 contracts traded. So basically, this candle being going one over this candle, because we did see another order over here, just alone by a little dot there. I don't know if you can see it, but yeah. So this candle is 1,320 contracts traded in that one candle, and then it looks like there was one contract traded over here around 2. And so from that, we can see that the open interest from the 13th into Monday, yesterday on the 16th, went up by about 1,100 contracts. So that does suggest that these were opened, not closed. but I think that they were sold to open because of this red volume that we're seeing here. And that would also make sense that when Webull has pulled down so much, as you can see the yellow line here, that would make me think that those contracts were sold to open, selling cash secured puts. So for this first contract, that would be like saying, I am going to put on the table, let's just pull up a calculator to do some math here. So for this individual contract, we have on this day, on the 13th, the average contract price was $25.64. We're going to multiply that by 100 because each contract represents 100 shares. So that premium $25.64 is actually worth $2,564 per contract. But we see that the number of contracts that were traded was around 1,300, but the open interest only increased by 1144. So let's do the math on that. So multiply that by 1144. That represents a premium of just shy of $3 million. So somebody perhaps maybe sold some cash secured puts to collect a premium of $3 million. But in order to do that, they would have to have the cash in order to secure those puts at a strike of $35. So this is $3 million potential profit there just from the premium, but they would need to have cash on the side to secure those puts. So at a $35 strike, that would be $35 times 100 shares per contract times, let's see, that 1144. So they would need to have over $4 million, on the side to secure those puts. So that's a pretty good, ratio, I would say, that you're getting a 75% return on that money that you're putting on the side. So you put $4 million down and you get 75% of that back, $3 million. And so you basically, this is a trade of $1 million. Put $4 million down by getting $3 million back, putting down $4 million. And if Webull closes below 35 on November 21st, that would then mean that you get to buy those shares, that you would then get exercised or assigned to buy the shares at $35. But if it closes above $35, you would then, have the option to buy. Then this would actually expire worthless, I should say. If this closes above 35, this would expire worthless. You'd then get that $4 million back, and you'd have collected that premium of $3 million. So I see this as being, kind of a valid trade, that this would suggest that somebody was selling a cash secured put here. And then I'm not going to do the math for this one because it's a little bit more complicated with more candles. But what we see is this is a $30 put with a strike that expires in January of 2027. And what we see is on the 13th, open interest was 40 contracts open, saw an volume of 2,700 contracts traded, and just shy of 2,700 went into an increase in the open interest. And so maybe I will just do the math on this. Why not? It's, not too difficult. So we can see the average premium traded on the 13th was $21.90. Multiply that by 100 shares per contract, and then multiply that by the increase in open interest. So that's going to be 2,688. So that would be collecting a premium of just shy of $6 million. But what would be having to be put down in order to make this trade, to secure it, cash secured put? So that would be $30 per share, so times 100 shares per contract, and then times the open interest increase there is 26.88, and so that would represent $8 million needed to have to secure these puts. And so that would be like, put down $8 million, but get about $6 million back. So it would only be risking, really $2 million on this trade. And if this does close above $30 a share on January 15th of 2027, then you could have the option to buy these shares at 30, or no, so then it would expire worthless, and then you just collect that premium, which was $6 million. You'd get your $8 million back. Or if this closes below 30 on January 15th of 2027, then you would potentially be getting assigned to buy the shares at $30. So risky there, but this does make sense as being cash secured puts. If we do look up the data here, Webull, this is the contract that I was interested in, I guess, but I don't hold. And maybe this is actually one that's kind of intriguing to consider getting. Let's see, the 16th over here, so that was yesterday, the average fill was 53 cents. And this open interest did increase by 18. So this is not necessarily an exciting contract, but this is the $30 strike call with the January 16th expiration. So about 213 days between now and expiration, but we don't really see too much in the options data over here. We see the net put premium being down a little bit, the net call premium also being down a little bit. So down, let's see, 50K for the net call premium, down 84,000 on the net put premium. And so nothing too that stands out too much there. But if we look at the data here, this is what I was looking at in the screenshots for the 13th over here. We see that net put premium increasing, but volume decreasing. So very interesting there. This does make me think that bull is starting to look fairly bullish down here, sub $11 a share. So that makes me intrigued by this, but not because of something on the chart necessarily. Something on the chart, yes, but as far as time goes, the chart can trick you as far as time goes. Between now and November, thinking about this contract over here, I do think that we could be seeing Webull rallying. I do think that this could be right around the bottom. So not a good time to sell, a good time to, start to establish a small position, maybe consider getting a call. So I'm kind of intrigued by that versus, holding shares. But yeah, anyways, that's all really that I wanted to go over, but I'm just going to open up the chat to see if there's anything there. Nobody put anything in the chat about 6 minutes before the hour, so I'm going to close down this stream. I'm just going to throw this up here because, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more pre-market or overnight market preps like this pre-market prep. I'll see you tomorrow morning for Wednesday's pre-market prep on Hump Day. Have a great day trading. Hopefully it's a good one for you.